Hello traders, and welcome to this video analysis looking at the Japanese yen and the Swiss franc. So traders, just to reiterate, the safe haven currencies, that being the yen and the Swiss franc, are only really gaining momentum when other currencies weaken, or of course when stock markets are falling globally. As we know, the two safe haven currencies do appreciate in times of uncertainty, and they are less likely to appreciate during times of normal conditions around the world, if stocks are rallying higher or if other economies are doing well in the global marketplace. And that's because, of course, Japan and Switzerland have both 0% interest rates, which means that buying the currencies against other currencies, buying the yen and the Swiss franc against other currencies with higher interest rates, you understand that you lose money automatically just by buying the yen and the Swiss franc because of the negative difference in interest rates. So that drives the currencies lower in the markets when there's no safe haven demand. But when other currencies are cutting interest rates or there's uncertainty in the world, that's when we see these two currencies appreciate in value. So against the US dollar, we're likely to see the yen and the Swiss franc both appreciate more against the dollar if the central bank does follow through with these rate cut expectations later on this month, and that the Federal Reserve signals further rate cuts are coming further down the line. Then of course that will make the dollar weaken against the Swiss franc and the Japanese yen. So that's something to monitor. I did cover that in the analysis of the US dollar. Against the British pound, traders, again, is quite similar. If Brexit situation gets worse, then we could potentially take short positions against the pound for the yen and pound against the Swiss franc. But then in reverse, traders, we know that if Brexit gets better and the situation looks like it won't go towards a no deal, then we know all this depreciation in the pound will rapidly reverse, and that gives us some really interesting opportunities. So Brexit will be the key driver for the pound against the Swiss franc and the Japanese yen. Interestingly, traders, so the Aussie dollar had been getting weak against the yen because, of course, the Australian Central Bank had cut interest rates twice this year already, and that, of course, diminished the value of the Japanese yen. Then we also had the US-China trade conflict, which was causing some safe haven demand into the yen, which caused this currency pair to push lower in the markets. I did close my buy position that I was previously in, traders, but again, if the situation between the US and China can get better, if they can look like they're walking towards a trade deal, then that risk of the Australia's economy, which is so exposed to a slowdown in China because of their trading relationship with the Chinese economy, then that could cause a strong rebound in the Aussie dollar. So that is something we need to monitor. Or we could see an Aussie dollar weaken against the Swiss franc if economic data gets worse in Australia and the central bank feels they need to cut rates again lower than they already have cut rates. So it's the same for the Swiss franc as well. Aussie dollar may appreciate if the China trade war gets better, or there is a rebound in economic growth now that they've cut interest rates, but that will be further down the line. Or we could see the Aussie dollar weaken against the Japanese yen and Swiss franc if more rate cuts are expected, or if we have more risk off sentiment in the stock markets causing the yen and the Swiss franc to appreciate in value. I will also share, traders, the video that I have posted many times about explaining why the yen and the Swiss franc appreciates when stock markets are falling. So I will post this after this video. But again, traders, it's the exact same situation for the New Zealand dollar. The central bank was cutting interest rates this year. The yen appreciated against the New Zealand dollar as a result, and so did the Swiss franc. But again, if the US-China trade conflict gets better, this will boost the New Zealand's economy. And if there's no more rate cut expectations for the New Zealand Central Bank, similar to the Reserve Bank of Australia, we could see the New Zealand dollar start to creep higher. Because again, remember, traders, New Zealand Central Bank has still got a higher interest rate than the Swiss and the Japanese central bank's interest rate. So unless the yen is going to appreciate in value and the Swiss franc is going to appreciate in value against the New Zealand dollar or the Aussie dollar, it's likely that these two currencies will push a bit higher because investors are going to be losing money overnight from the difference in interest rates. And then we have the Canadian dollar against the Japanese yen. And again, the Canadian dollar has recovered because oil prices have recovered. So if you're looking at oil, traders, remember when we can see the yen was getting stronger against the Canadian dollar until around May. And if you look at the oil markets, they had been also falling in May, but then they've turned around, and subsequently we've seen the Canadian dollar also appreciate. So that's something to monitor, because if oil prices start to rally higher, especially with OPEC cutting production more again until the end of 2019, early 2020, we could see oil prices recover higher, and that will of course push the Canadian dollar higher against the Japanese yen, and the same situation for the Swiss franc. So traders, I hope that makes sense. Remember, the yen and the Swiss franc are only going to appreciate if there's risk-off sentiment in stocks or if other currencies are weakening. But apart from that, they don't really appreciate in value against most currencies because of their low interest rate policy by both central banks. I forgot to do the euro, but again with the euro, interest rates are at 0 already in Europe, similar to Japan and similar to Switzerland. So again, be interesting to see now what happens if the European Central Bank does cut interest rates, because they're really just going to be cutting interest rates into a negative territory, which is what the Swiss interest rate is already at, and the Japanese yen interest rate is already in a negative as well. So that'd be an interesting play. So I don't really have a directional bias for that position, so I'm not really sure how markets will react to two countries having pretty much the same situation in the world. So I hope that makes sense, traders, and that's my analysis for the yen and the Swiss franc.